Hi, I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network. Today is our favorite day, the Primary Vision Frac spread count. We're going to have a short show. You know, we've had a lot of different things that we've covered over the last couple of weeks, so this will give you a chance to go back and watch some of them perhaps. But right now, all we really want to talk about is what's happening on the frac spread side, and what is that leading to when we start talking about the assets in terms of rigs, where are rigs going, and how is that going to change over the next few weeks, if you will. So when we look at what has happened so far, we had a drop of 11 spreads. So we went from 267 to 256. Again, this is very normal when you think about just time frames. That you typically get a little bit of a drop, then you flatline, and then you have another move down when you look at between Christmas and New Year's, and then you have that nice spring load back in terms of what happens in January and February. Now, with that being said, a lot of the drop in terms of this 11 was the smaller basins. So the smaller basins have seen a lot of their activity either flatline, though we do have an increase in some of what we have deemed other basins, which is it's really encompassing a lot of dry gas. And we've actually seen an increase in activity in these areas, while the Permian continues to hold firm. Small drop, but still, the Permian has been really the mainstay at this point without a significant drop in activity. Now, that's something that we do expect to persist. With the next drop in activity, we think it will come from the Permian. The Permian will see the largest, let's just say down move when you think about that 10 days off that people get before they go right back into activity. But then at the same time, when you look at at spreads coming down, you have rigs coming back up. So when we look, oil rigs were increased by 4, and where are they increasing? In Texas and in Oklahoma, in Pennsylvania. So Texas again being the biggest point, because the Permian, the frac spreads active in the Permian right now is the same or greater than the last 3 years, and that's, I think, very important when we look at where is growth going to come from. What is 2022 really going to look like? So there isn't too much to write home about. We've talked about how there is going to continue to be that inflationary pressure when we look at supply chain, steel, diesel, other, and then labor, in terms of labor continuing to be the biggest point. So as we drop to 256, and then when we look, there will be one more drop lower. But then the bounce back to 274, which is where we peaked this year, will be fairly quick. It's something that'll happen by the second, third week of the year. But I think the biggest and then the most important thing is, where are we going to be in Q1 of next year? And that's why we have our supply report. So our supply report just came out. It's looking at horsepower by pumper, by basin, because we want to not only is it important to understand what is active, but what is available, what is being marketed, how much is being marketed, and how much is available in each basin. Because, we had a discussion with a potential client yesterday, and the question was, okay, based on natural gas prices, let's just say the Haynesville should have 30 spreads, but we know that there's only enough horsepower for 22. So even though the economics, the numbers say that there should be 30 spreads available operating, we know that isn't physically attainable. And that's, I think, the most important part of our supply report, is understanding not only what is actively working, but also what is available and what is actively being marketed above what is currently working. And I think those key pieces really are going to dictate how quickly do we see some of these increases. As we said, the top end of our view for the year was 275 spreads, 11.7 million barrels a day exit rate. We're right there. And now as we go into next year, we expect to see, again, spreads coming back, but you have to repair them. You have to fix them. What is actually viable? And I think that's the question that we're going to be answering as we go into the end of this year, but also more importantly, January and February, as we compile the rest of this data and make our projections, where we think a 12.1 to 12.3 million barrel a day exit rate, very doable, especially given the fact that rigs are starting to run higher than spreads, which is one of the key things to increase the DUCs, increase running room, allows some of these spreads to continue to operate. The addition of a more capacity under the dual stem or simul frac, depending on the nomenclature you know it as, and this will be a key driving point and a growth story as we go into next year and beyond. So that's what we have for you today. Hopefully you have a great weekend planned. I know Christmas is right around the corner. COVID testing has increased. I know it's starting to rip through pretty much everywhere I look. So hopefully everyone stays healthy. If you have it, hopefully we're hoping you a quick recovery so that you can obviously enjoy your holidays. So thanks again for watching, and we hope you have a great weekend. I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network.